Good morning and welcome to TOITOI Japan Market Radio for Thursday, February 12, 2026. I'm your host coming to you from Tokyo, and this is your daily briefing on Japanese markets designed specifically for global investors tracking their Japan exposure. With me today is our portfolio manager who specializes in Japanese equities and macro strategy. Let's dive straight into today's session.
Thanks for having me. So looking at the numbers, we're seeing a bit of a mixed picture across Japanese equities today. The Nikkei 225 closed at 57,639.84, essentially flat with a decline of just 0.019%. Meanwhile, the TOPIX showed more strength, finishing at 4077.0, up 0.741%. The Mothers Index, which tracks smaller growth names, fell 1.14% to 2,254.0, and the J-Right Index dropped 0.343% to 2033.0. On the currency side, dollar-yen is trading at 153.678, down 0.52% on the day.
That divergence between the Nikkei and TOPIX is worth noting. We'll dig into what's driving that in a moment. But let's start with the big corporate story making waves globally today. SoftBank has swung back to profitability, and the driver here is a substantial valuation boost from its OpenAI investment. This is generating significant attention given SoftBank's weight in Japanese indices. Walk us through what happened here and why it matters.
Absolutely, this is a major headline for Japan's tech sector. SoftBank Group has returned to the black after its stake in OpenAI saw a sharp increase in valuation. As OpenAI's market value has climbed, the mark-to-market gains on SoftBank's holding have translated directly into improved financial results for the conglomerate. Now, why does this matter specifically for Japan? SoftBank is the largest technology company in Japan and essentially acts as a bellwether for the domestic tech sector's health. Masayoshi Son's strategic pivot toward artificial intelligence as a core growth driver is being validated here. This also reinforces Japan's participation in the global AI boom, which is one of the most critical technology trends we're seeing right now.
And in terms of market impact, SoftBank carries significant weight in both the Nikkei and TOPIX. What should investors be watching in terms of knock-on effects?
The impact on equities is likely positive across the board. SoftBank's improved profitability should provide support not just to its own share price but to the broader indices given its heavy weighting. We could see positive sentiment extend to other Japanese tech names and semiconductor stocks as well. On the yen side, better corporate earnings typically support risk appetite, which can provide a modest tailwind for yen strength, though I'd note that global macro factors remain the dominant driver there. As for JGB yields, the impact is probably neutral to slightly negative in terms of price, meaning modest upward pressure on yields. Improved growth narratives can weigh on bonds, but structural factors like BOJ policy are still far more important.
Staying with the technology and digital economy theme, there's another significant story today involving PayPay, Japan's leading mobile payment app. The company is planning a Nasdaq listing in March with an anticipated IPO valuation of $19.6 billion. This feels like a milestone moment for Japan's fintech sector.
It really is. PayPay listing on Nasdaq represents a significant validation of Japan's fintech capabilities and its digital payments ecosystem on a major global exchange. This elevates Japan's profile in what is a highly competitive Asian tech space. From a capital flows perspective, a successful Nasdaq listing will likely channel substantial foreign capital into the Japanese tech and fintech sector more broadly. That could shift investment dynamics somewhat away from Japan's more traditional sectors. It's also a confidence signal, demonstrating that international investors see real value in Japan's digital economy, which could attract further attention to Japanese tech ventures going forward.
Now PayPay is listing on Nasdaq rather than the Tokyo Stock Exchange. Does that limit the direct impact on Japanese equities?
To some extent, yes. The overall market impact on the Nikkei and TOPIX will likely be modest because the listing itself is offshore. That said, we could see sympathy gains among domestic peers in the digital payments space and fintech-related stocks more broadly. On the yen, there's a minor supportive effect through increased foreign investor interest in Japanese tech assets, though I wouldn't expect this to be a significant FX driver on its own. JGB yields will see negligible direct impact, though any effect would come indirectly through improved sentiment about Japan's digital economy and growth potential.
Meanwhile, in corporate news, we're seeing a much more challenging story out of Dentsu Group. The advertising giant posted its biggest ever loss and announced Takeshi Sano as its next CEO. This is clearly a company in distress. What's the read-through here for Japan's broader economy?
This is a significant negative for Japan's advertising and marketing sector, and frankly it raises some broader concerns. Dentsu is Japan's largest advertising conglomerate with substantial exposure to domestic consumer spending trends and corporate capital expenditure cycles. The fact that they're reporting their largest ever net loss while also changing leadership suggests there are deeper structural issues at play. It could be related to digital transformation challenges, cost structure problems, or competitive pressures, but either way, the CEO transition signals that management recognizes the need for a strategic repositioning.
And Dentsu is quite globally diversified, so this isn't just a Japan story, correct?
That's right. Dentsu has significant international operations, so this distress reflects broader headwinds in global advertising markets. But it also raises questions about Japanese consumer demand and corporate investment appetite domestically. For Japanese equities, we're likely to see near-term negative pressure on Dentsu shares and potential weakness across the broader advertising and services sector. If this loss is signaling softening in Japanese consumer activity or a corporate investment pullback, we could see selling in domestically focused cyclical stocks as well.
What about the implications for monetary policy or yields?
The yen impact is minimal directly, though sustained losses at major conglomerates like Dentsu could weigh modestly on risk sentiment toward yen-denominated assets. For JGB yields, there's unlikely to be a material impact in the short term, but ongoing corporate weakness like this could reinforce deflationary concerns. That would support a lower for longer rate environment and be modestly supportive for JGB prices, meaning downward pressure on yields. The key question for investors is whether this reflects sector-wide stress or Dentsu-specific mismanagement. The credibility of the new CEO and the turnaround plan will be critical for reassessing the company's valuation.
So we've got a real mixed picture today. On one hand, SoftBank returning to profit on AI gains and PayPay heading for a major Nasdaq listing, both positive stories for Japan's tech and digital economy. On the other, Dentsu's historic loss raises questions about consumer and corporate spending. How should global investors be thinking about this divergence?
It's a classic barbell situation in Japan right now. The technology and digital economy segments are showing real strength and global competitiveness, attracting capital and validation from international markets. At the same time, more traditional sectors tied to domestic demand are showing fragility. For global investors with Japan exposure, the key is understanding which segments of the market you're exposed to. If you're overweight legacy sectors like traditional advertising or domestically focused services, you need to be asking hard questions about structural headwinds. If you're positioned in tech, fintech, or AI-exposed names, the momentum appears much more constructive.
And with dollar-yen down about 0.5% today to 153.678, that's providing a bit of a tailwind for Japanese exporters in theory, though we're still well off the highs we saw earlier this year.
Exactly. The yen move today is modest, but any weakening in the dollar-yen rate does provide some relief for exporters in terms of translation effects. That said, at current levels around 153.678, we're not seeing dramatic volatility. The BOJ remains in a wait-and-see posture, and until we get clearer signals on wage growth and inflation sustainability, I don't expect major policy shifts that would drive sharp yen appreciation. For now, the range we're in feels relatively stable.
Before we wrap, any final thoughts for investors watching Japan today?
I'd say the main theme is selectivity. Japan is not a monolithic market, and today's news really drives that home. You've got world-class tech and AI exposure through names like SoftBank. You've got fintech innovation with PayPay reaching global capital markets. And you've got legacy challenges in sectors like advertising with Dentsu. Global investors need to be deliberate about sector and stock selection rather than just buying broad index exposure. The divergence between Nikkei and TOPIX today, with TOPIX up 0.741% while Nikkei was essentially flat, reflects that underlying dispersion.
Well said. That's a wrap for today's session. Thank you for walking us through these key developments. If you're a global investor tracking Japan or managing Japan exposure in your portfolio, we hope this daily briefing helps you stay on top of the market drivers that matter. Consider subscribing if you want to keep following our coverage. We'll be back tomorrow with another market update. From Tokyo, thanks for listening to TOITOI Japan Market Radio.